What we're going to talk about with this lesson, when you have low float stocks or stocks that are super volatile, they're moving more than $1 effortlessly on the minute time frame. We're looking at BRCC here, and recently we had a lot of stocks just go on epic, insane runs. Let's look at a few of them real quick to give you guys an example of what we've been dealing with here in the markets. Yesterday we literally had ISPO. Take a look at this yesterday. Zoom in here. Yesterday this stock ran from $15 all the way up to a high of $110 a share. That's insane. What else did we have? It was NVCT run up from 550 up to 10. We had a handful of stocks go on stupid runs like this. CPTN is another one. This stock ran up from $8 all the way up to a high of $80 a share. That's an insane run on a stock like this. Insane run. So we're starting to see a lot of these stocks go on big rips. Today, LFLY, look back yesterday, it quickly popped from $7 up to almost $9. This morning, same thing, from 7 rips up to almost 9, and it's setting up again as it's starting to pop up there to $8. But most importantly, I want to go back now to BRCC and break this down. BRCC yesterday went from 1550 all the way up to a high of 2250. So you're visually seeing that these stocks have range and they like to move a lot, right? You have to adjust and accommodate to the volatility of this stock. And what people try to do, they try to micromanage prices. They try to pinpoint it down to the exact price for bottoms and tops. And when stocks like this pop up, you can't do that. The most important thing you can do is adjust, and you really want to just focus on the levels of interest, areas of interest. So this morning we were talking about BRCC as it was building up. When it started to push up here to 20 and run up here to 2150s, we took a step back, we zoomed out on this, and we put a line across this green line right here. And what I said was, okay, so if this stock falls down, there's a make it and or break it line that I put out on my charts. If a stock is bullish and the overall sentiment is bullish, that green line is my line. If it falls below that, it's done. It's over with. But as long as we hold up over that green line, the overall sentiment is still bullish. That's at $19 a share. We come down, we've bounced right off of it, right back up to 20, up to the highs. And as you see the rest of the day here, we're just hovering right at around this $20 with my yellow line right here. So now we're focused on the level $20. That area. Now, this is where traders can start to mess up. And I know you're trying to be safe and protective when you're putting in a hard stop, but when you got stocks like BRCC here, you can't really be using a hard stop because you see how the stock is fluctuating in and out of that $20 just effortlessly, like running down here to $19.25 and then right back up to almost $21, running back down to $19.50, running back up to 21 bucks, running down to 1975, running back up to 21. And then even if we zoom in a little bit right here, stock is up here at 21. Look at how effortlessly right here the stock went from 21 and flushed all the way down to 1950. So you got to focus on the area. Don't try to micromanage the price, because what's ultimately going to happen, you're going to fluster yourself, you're going to stress yourself out, you're going to play mind games, and the stock is going to defeat you. And this is how people slowly bleed out their account and they overtrade it. It's just self-annihilation. They self-defeat themselves. They let their mind get the best of them. And this is why I say it's just best to focus on the areas, Just focus on the areas. If you feel this or see that the stock has potential to run up $3, $4, $5, that's the upside potential for the stock. Why are you gonna stress yourself out over 50 cent, $1? Give the stock room to breathe, room to run. I have my line $19.50, $19. If we hold up at this 20 level, it could dip down $19.50, $19. It could dip down that far. This is where you also have to consider now your size. Be cautious with your size. Maybe only trade half or 25% of your size. So that way, when the stock does effortlessly move up and down like this, you're easygoing, you're letting the stock breathe, do its thing. And if it falls down below 19, just cut it. You'll take $1 loss, but the upside potential on it, $4, $5, that's a good risk versus reward ratio. So when these stocks are moving like this, you have to adjust to the environment, the conditions. We see that it's super volatile, so give it room. Stop trying to micromanage your price action. And this is where a lot of newer people, they just don't realize to think like this. And that's why I'm bringing it to your attention. This is how you have to adjust and adapt to these different stocks. This is a total different trading style and philosophy than stocks that like to grind up and down. So let's look at something like NU here. This was a nice runner today. But by looking back on this stock really doesn't have any real explosive moves to the upside. Always look back to get a visual of the characteristics of this stock. What is its personality? How does it like to move up and down? How does it like to move? That's the personality of the stock. So from here in the morning, it went from 920. It ran all the way up here to 990s. And then it pulls back down here to 940s, grinds back up to 970s. So this is more of like a grinding type of stock. It's a grinder. It's not explosive and ripping up $1.50 per share. This is the characteristics of the stock. It likes to grind pennies at a time. Fast forward into today, stock this morning opens up 1020s, runs up here to 1090s, pulls back 1050s, then it grinds all the way up to 1140s, 1150s, pulls back down holding 11. You get a better idea of how the stock likes to move. You're not seeing explosive moves of $1.50, $2. The volatility that we're seeing with BRCC, you're not seeing it with this stock. So it's grinding. It's liking to run up and down in levels of 50 cent, I would say. It likes to move up 50 cent, pull back 50 cent, maybe grind up $1, pull back down and grind down $1 or 50 cent. So let's see, from here, 1020, grinds up to 1085, gets a nice little 30-40 cent pullback here. So measuring, so this move right here, it pulls back half, then this big run up here pulls back about half, pops up here, gives back everything, then another grind up here. So it's a grinding type of stock, like we've been saying. And from 1050 right there, 1050 grinds all the way up here to 1150. That's $1. It grinded up, then it pulled back here 1150 to 11. That's a 50 cent pullback. So it pulled back 50%, pushed back up, tested its high, pulled back, then it grinds up here from 11 all the way up to 1180s. That's a 80 cent grind up there, so almost $1. And from 1180s, it pulls back down to 1140s right there. That's 50%. So you get an idea of the characteristics of this stock. That's how you can start revolving and putting together a strategy and an idea of how to trade this stock. It's very tight. It likes to move fluidly, up $1, pulls back 50 cent. You guys get where I'm going with this? So that's why it's important to pay attention to a stock's characteristics, how its personality. Let's look at ISPO real quick. This was a big mover yesterday. This stock, looking at it, a lot of people truly overlook the characteristics and the personality of a stock. They overlook the candlesticks. That's why I teach you guys to really focus and tune in on the candlesticks, learn about them, understand them. So looking back yesterday on ISPO, this stock was running from 22 up to 26 gets halted. That's a big move. Here goes from 28, it flushes down to 24. That's a $4 per share drop in 1 minute effortlessly. You got an explosion here from 36 up here to 43. That's a $7 rip on 1 minute. Just visually going over the candlestick, seeing how much it likes to rip up effortlessly, down effortlessly. You're visualizing it. That way the next day when you start putting together a plan, you already know how the stock likes to move up and down, so you're not going to get freaked out on the price action of this stock. Here when it bottomed out at about 75 bucks, where this red line is. Let me move it down a little bit. Bottoming out here at around 75, it was just bouncing up to $88. Wow, that's a $13 bounce right there. Back down to 75, bounces up here to 90 bucks. These are big moves, super big moves. Fast forward into today, stock opens up at 72, flushes down to 62. That's a $10 per share drop. Then it rips up from 62 up to 75, just about. You can see how tightly they're pulling it back right here. Then it started to fall through right here. This is your wedge right there. Morning wedge. It fell through that 60 bucks. And then it got drilled all the way down to 48. Stops making lower highs right there. Now it's starting to make higher lows, starting to make higher highs, and it's trending up. And you see right where it's topping out at, right at that 60 bucks, where it fell through right here. So this is going to pull back down. And right at around this $52, you're going to look for this area to hold up. Let it hold up at this 52, rest, build up, and then later on in the day, we could bust up through that 60 and we could run up here to about 75. Focusing on the areas. We know how volatile this stock is, how it likes to effortlessly rip up and down. Get familiar with the characteristics. Now you can take into consideration what's my size gonna be to protect my downside. For me, I'm normally used to trading with 1,000 shares in normal conditions, but with this being a unique situation, I'm probably going to scale back and I'll trade maybe 200 shares. I'll trade 20% of what I normally like to trade just to protect my backside. If this does flush down $2, it's not going to kill me.